After days of dire warnings from the IMF and World Bank annual meeting in Indonesia, protesters had a message for them of their own.
The IMF and World Bank are no longer needed by the people of the world, especially in Indonesia, because the whole time the development system executed by the IMF and World Bank is hurting the people of Indonesia and the world in general.
The organisations themselves, of course, see bigger threats at play. On Friday, IMF chief Christine Lagarde and her colleagues issuing alarm bells yet again on the possible impact of sustained trade tension on economic growth, particularly in Asia.
Our scenario shows that in a worst scenario, the peak impact on China's output could be as large as 1.6% over the first 2 years. And for the US, the impact could be by around 0.9%.
A market rut in some emerging economies could also worsen if the Fed and other central banks tighten monetary policy more quickly than expected, the IMF said, calling for a global cooperation to stop that happening, and say some with good reason.
So the IMF had finally thought that we may be getting back to where we were before the financial crisis in terms of growth in the economy, and they were forecasting 3.9, nearly 4% growth for this year. Well, that now is no longer achievable, and that's the real worry. And the question is what happens next year if these trade disputes really lead to this slowdown, which we're seeing actually in Europe.
A huge stock market sell-off in recent days has in part been blamed on the IMF World Bank warnings, but other factors too are at play, including massive public debt, interest rates rising, and a possible slowdown that was overdue anyway.